Back with closing trades right here on ET now, and we're still celebrating our 15 glorious years. Let's just take stock of what the market as well has been up to, because we've not done bad. I mean, of course, we've made a fresh all-time high on the index just today. We're holding about 88 points or so higher, 23,555 nearabouts on the Nifty futures, 23,550 on the Nifty spot right now. But, you know, it's interesting to see that other than the Nifty, all the action is actually outside of the index. Look at some of the biggest movers today. You've got a City Union Bank, which is scaling nearly about 4% higher. You've got a HAL, which is holding out very smartly in trade. You've got, large part of the movers, which are actually outside of the index in today's trading session. But you know what? I'll have Ansh identify all those movers. Let me take it across to him for all the buzzers of the day. Ansh?
Right, so Canfin Homes will be the first stock in focus for today's session, as the stock has given a breakout from its horizontal resistance zone, which has been intact from last 7 months, and it has also touched a 10-month high level as well, with volume of over 6 times its average trading volume of last 20 sessions. Apart from this, M&M Financial will also be in focus, as the stock has given a breakout from its horizontal resistance zone, which is around 300 mark, touching 8-month high with volume of over 2 times its average trading volume of last 20 sessions. Bosch is also in focus, as the stock has given a breakout from its reverse head and shoulder chart pattern, touching record high level as well with good volumes. Lastly, Voltas will be in focus, as this stock has also given a breakout from its horizontal resistance zone, and it has touched a record high level. Now, apart from this breakout stocks, there are high chances of Piramal Enterprises getting into ban list for tomorrow. So keep an eye on the stocks.
The 900 mark after a very long time. If you could pull up the Piramal Enterprises chart for the last 6 months, it will be interesting to see. Also, be careful if you want to take some positions home, because it could come in ban, the way that stock has got traded. But Nuresh, Piramal, what happened today was this morning, the NBFC part of the business gave out a commentary that current AUM already 50,000 crore, and they want to double it by 28, which is next 3 years. The stock got a bit excited. What do the charts tell you?
So it's been a terrible stock in terms of the number of false starts it's taken over the last 1 year. Every time it comes closer to the breakout, it flops. If you look even in the last 6 months, there have been 3 attempts around this mark of 920 odd, rather 950 to 960 level. And every time it has come there very close to a breakout, it has flopped out and gone again back to 800 and sub 800 levels. So this time around also, we have a lot of resistances around that band of 950, 960. So would wait it out. It could take much longer for the trend to change out here. So for now, 950, 960 remains a very stiff resistance. And if it can sustain that on a closing basis, that would be a trend changer out here. So would wait. As of now, too early to call the trend change.
Dipan Mehta is also joining us from Elixir Equities. Dipan, thanks for your time. The mid-cap end of the market there is no stopping there. Is it getting slightly out of control in your view?
Yeah, good afternoon, and congratulations on completing 15 years, and thank you for having me on your show. It's been a privilege to be with you for the last 15 years on each of your shows. It's been a great journey. Coming to your question about mid-caps, I think we are seeing full flow of money play out over here, and a lot of money waiting in the sidelines, waiting for the election uncertainty to be over and done with, is now finding its way into the market. And typically mid-cap counters do not have as much liquidity. So even small amounts of buying a few thousand shares or a few lakh shares cause an upsurge in stock prices, which is what is taking place just now. Also, there's this phenomena that existing portfolio managers and mutual fund asset managers, as they get more and more money in the same scheme, it's difficult to find new stock ideas. So existing holdings of mid caps, that is where you allocate your fresh money, which is coming into your various schemes. And that's also keeping the stock prices higher. Otherwise, how can you explain a professional manager buying a mid-cap stock at 60, 70 P multiple, which is what is happening just now?
Right. Dipan, thank you once again for joining in on our special day today. I mean, have to ask you, where is it that you are placing large part of your bets in right now, the highest allocation to you and your clients' portfolios?
So I think more or less we are, invested, but looking at increasing cash in our portfolios and for our clients as well. And I think that valuations are really stretched at this point of time. But correction also is not happening because there are no triggers for a correction to take place. But I would say that portfolios, we are trying to drive them more towards the defensive side and the large cap holdings. I think there is still some sanity of valuation when it comes to large cap holdings. The larger ones, the large banks, the large IT companies, the large pharma companies, they are still in that ballpark figure of 15 times to 30, 35 times trailing 12-month price to earnings multiple. Similar businesses in mid cap and small cap are 30, 40, 50 times P multiple, which is a bit unreasonable. So I think that the tilt has to be more towards large cap stocks. And that's where we are trying to drive our money and or that of our clients. But as I said, I think gradually trying to increase cash levels as well.
Right. Clearly, I mean, I'm sure you are also going through the same feeling as some of the big HNIs and retail, looking at the juicy prices, the itch to book profits. Have you started trimming positions anywhere you are not very comfortable right now? Can you name a few areas?
No, I think that wherever, first of all, I think trimming is, we are trying to do across the board, minor trimming across the entire portfolio, because stock prices are going up and they're going up across the board. It's not that it is concentrated in one or two sectors. Today, if it's defense, tomorrow it is capital goods, on the third day, specialty chemicals, then cement comes into play, sometimes it's auto ancillary, then it's auto. So there's a superb rotation of sectors. So then just trying to say that, look, we're going to focus selling on this particular sector may not be the best strategy. But look, if you want to increase cash levels, you want to take the portfolio tint towards large caps, towards the pharma, software, and banking stocks, then you need to trim across the board and try and remodulate your portfolio in such a way that if there's a correction, then maybe your portfolio will not fall as much.
Kunal, Phoenix is almost on a circuit, 10% circuit, 4,000. It took months for this stock to cross the 3,000 level mark. What exactly is happening here? And is the move coming on the back of volumes? No, or is it a shallow move?
That's the key point over here, Rajay, that the volumes today are a bit more shallow for many of the stocks. Now, Phoenix, and of course, I think major part of the move for Phoenix has happened in the last 15-20 minutes or last half an hour or so, and that's why you've seen the average volumes relatively okay as compared to the volumes in the last few days. But then the cleaner part of the trend for many of these stocks is that these stocks are giving signs of a very strong breakout, and it's a congestion breakout for many of these stocks. So they were stuck into a range, a trading band, a 5% to 10% band, broadly for many of these names. And right now what we're seeing is that because of the way the small caps, mid cap stocks are moving up higher, you're seeing many of these stocks are trying to come back into a breakout mode and then ending the zone of congestion for themselves. So I think that's the more critical sign. So I think today's volume may not be very much high as compared to the previous, maybe last 4-5 days of average volume for the stock. But I think eventually, because of this, the way the prices have broken out, you should see a strong follow-up up move for many of these names, and that too on the back of much more relatively higher volumes.
Interesting. Let's also get you some of the thoughts we gathered through the day with Purenju, Ridham Desai on areas of the market which will attractive to them.
I feel next 5 years is going to be a very important time for the agriculture in India. With respect to the rural stress we are going through, it's a huge challenge out there. And, after the 10 years of these reforms, and people complain about the gap between the haves and have-nots have widened. It's true. So that is how the initial part of any large reform period starts. So we have gone through that. Prime Minister Modi's vision and the government's efforts have created a wonderful platform to grow much bigger.
Farm sector, it is not in good shape. Okay, our farmers account for 40% of India's workforce, and they produce all of 15% of India's output. So they are 1/5 as productive as the rest of the country. And when you have 200 million farmers who are so less productive, something needs to happen. I thought the farm laws were great, Okay, but unfortunately the politics, caused them to be withdrawn. And I just hope that we get farm reforms, because if the farmers get some tailwind, then India will surprise on the upside. That's not baked into GDP, it's not baked into our market call. We're not assuming that the farm sector will do better than it has in the last 30, 40, 50 years. But it has great potential.
Okay, Deepan, good afternoon. Vinny joining in the conversation as well. What I want to talk about is the defense sector. That's seen a run-up. But look at Paras Defense today. We've seen ADIA entering it in a bulk deal that happened on Friday. Today also there was a large bulk deal that happened. And the stock seems like there's no stopping it again, right? 40% in the last 2 days itself. What is the view now on this defense sector, specifically anything that you have in terms of that?
Yeah, the fact is that the defense sector has got great earnings visibility. Last 2-3 quarters also have been exceptional in numbers because execution has picked up. But look, a lot of it has got captured in the valuations. And as I said, I think existing investors of these defense companies, professional fund managers, portfolio managers, because they have all these defense stocks in their portfolio and they're getting more money in, they're putting the same money in the same stocks and taking the stock prices higher, which is what is a sensible thing to do. But look, if you're a fresh new investor buying Paras Defense at these levels, or some of the shipbuilders or the large defense PSU defense companies at these levels, I don't think that over a 3-5 year period you'll get a fabulous outperformance because there's hardly any scope for Ps to get re-rated upwards. And look, these are large gestation, products which and projects which these companies execute. There can always be a few quarters of soft performance, and that can lead to a sharp reversal in stock prices. So I think right now a lot of the positives and the future earning visibility has got baked in. So according to me, the risk return profile doesn't favor buying these defense companies at these levels. But maybe at a correction, who knows, 25-30% correction in these stocks, and you may have some margin of safety, and that may be a good entry point. And you may wonder whether 25-30% correction is possible, but it certainly is. And these companies have seen such corrections in the past. So just wait and watch. As I said, I think the preference has to be for large cap stocks, index stocks, and try and take your portfolio to safer counters, safer sectors.
Right. What's also chopped up in trade? Let's pull up the charts of Garden Reach today. We have Garden Reach, Cochin Shipyard, Mazga Dock. All of these are buzzing in trade, almost 8 to 15% of gains for all these stocks that we are seeing today. Naresh, anything looking exciting from this front on any of these names for you on the charts?
Already moved up quite a bit over the last, say, few days as well as the last few months. So at current levels, the risk reward is not great in any of them. And it's tough to actually even book profits given the massive rally for a lot of people. So the viewers keep slowly trimming these names. The moves have been parabolic in nature and could take a pause sometime. So at current levels, not a buy in any of the names in the shipyard space as such.
Okay, nothing exciting that Naresh is finding in the shipyard space. I want to shift focus and talk a bit about the pharma names. I beg your pardon, FMCG names, right? And when you look at it, something like on a YTD basis, when I'm looking at it, Britannia, Tata Consumers, Radico Khaitan, out of that FMCG side, is something that has not outperformed. When you're looking at it, Kunal, anything exciting that one should watch out for in the FMCG pack? Yes, on the 4th of June and post that, we saw that bit of a run-up coming in for FMCG, but then again, it started seeing a bit of a subduedness. So anything that you are finding exciting there, Kunal?
Yeah, it's interesting because, the FMCG stocks at one point, in fact, the index was, up relatively almost 8 to 9%, compared to the lows or the closing of the indices on the exit poll day. And I think from there, what we've seen is that many of the stocks like HUL, Britannia, Tata Consumers, etc., these stocks managed to come back to their breakout point. Yes, the momentum has slipped for many of these names, but when you see such kind of a sharp rise for these FMCG stocks, that's one thing is looks like absolutely certain that these stocks have come back into a breakout mode. Now, because of the way the stocks have run up very sharp, you might probably see these stocks getting into a zone of consolidation. But my belief is that the likes of Dabur, Britannia, HUL, I think at current levels are very strong buys. My sense is that traders who have a time frame of 1 to 3 months and looking out for buying these stocks, on dips, I think these are classical levels to go for a contra buy into many of these spaces, because on the way up, whenever these stocks get back into a recovery mode or breakout mode, these stocks would probably retest their previous swing highs at least and then make a fresh high for themselves.
Right. Deepan, I just want your view in terms of overall the defensive side. Do you think that's the story that could now you could see it working out, whether it's FMCG or pharma in the next few months or a year? Is that the story that one could watch out for?
See, I think if there is a broad market correction, then certainly I think pharma, IT, these are the counters which will really stand out to an extent. FMCG also. Banks also, I think, especially large cap private sector banks, all of these three have been underperforming the broader market for past several quarters or so. And as I said, the rotation keeps on happening. So who knows, there could be a rotation into these counters as well. There are certain positive fundamental, underpins also around these sectors. For example, pharma, if you notice, last 2-3 quarters, US generics market have been doing very well. FTA related risks have come down. And global market, global demand, domestic demand for pharmaceutical formulations has been looking up. When it comes to software companies, I think they're sitting on decent contracts, decent order book position. Executions start to pick up, and then there's this entire AI wave which they can ride when it comes to implementing AI technologies. And when it comes to banks, I think even a slight reduction in interest rates and slight easy money policy would mean that the pressure on deposit and deposit rates would go down, and that would improve the net interest margins. The NPA cycle has still not turned negative. So there is something positive which is happening or likely to happen in these three large buckets, which I just said just now. So from that point of view, I think it's better to be overweight in these three segments. There is valuation comfort in all of these three. I mean, even the large pharma companies, whether it's Sun, Cipla, Dr. Reddy, Lupin, they're in that ballpark 25, 35 times trailing 12 month, not 50, 60 times. Private sector banks are typically between 15 to 25 times or so, which is reasonable, even lower than what they've traded in the past. And I would say that IT companies also in that large cap IT and that 25 to 30 times trailing 12 months, which is fair. So from that point of view, I think that's where investors should focus on, not just go on the train which is just moving, but look for counters which are still not moved up. That's where the trading and investing opportunities are.
For those interesting counters which has not moved up much, but I just want to mark one stock, that's Jubilant Pharma. Just a short while ago we did hear the news flow that came in that US FDA has issued 15 observations for its facility in Canada. So yes, this is something that we're watching out for, because we did see a sharp dip that came in Jubilant Pharma. At one point of time it was down as much as 4%, clearly recovered from that point. It's now down almost 2%, but yes, keeping an eye out on that. But let's move on and Naresh, get in some of your BTSD trades for today.
So looking at banking as a space as such, so that is where IndusInd Bank, which is stuck around that 1500 mark, but very close to a breakout. So risk reward trade here, stop loss at 1500, target price of 1550. Second is a buy on IDFC First Bank, which has given a breakout today after being stuck at that 78 mark. So this looks set for a move towards 84, 85, stop loss at 80.
Your BTSD trades for today?
So I'll go with IDFC First Bank as the first bet, would suggest a buy. My sense is that the stock should now confirm a very strong breakout for itself, something which has been pending for the stock since quite some time. So targets of 88, stop us at 77 for IDFC First Bank. And Exide Industries is the other stock which is looking quite charged up. The stock has made a fresh high for itself today, crossing about that 555, 560 mark. So would suggest a target of 600 and stop loss could be kept at 540.
Okay. Let's just talk about Zomato, Paytm, Nykaa. All these three today are in focus. Zomato, Paytm, obviously, because the news flow came in that, Zomato may be looking to buy the ticketing business. We did hear the clarification that came in that, yes, they are in talks, but nothing constructive that has shaped up there. Deepan, how are you looking at these, recently listed new age tech or whatever you may call it, this part of the deals that are coming in? How are you looking at the story for all these three, whether Zomato, Paytm or Nykaa? Anything that you would look at here?
No, I think we're watching them very closely, no doubt about that. And Paytm, has its issues on the regulatory front. but numbers were still pretty decent, maybe 1 or 2 more quarters and see how the resolution takes place over there. And Paytm may come back into reckoning. Zomato has done very well for us as well. Disclosure, we and our clients are invested in it. And I do feel that gradually value is getting created in these companies. Across the board, I think all of these new age tech companies or consumer-oriented companies are following through on their plan. They're getting more and more solid into profitability, and they're understanding what their investors are telling them. So I think that they've got great future. If you buy in a basket of these companies, hold them for 3, 4, 5 years or so, they could turn out to be great value creators, could be even multi-baggers from these levels. Because even 3 to 5 years from now, these companies will still demonstrate growth of 25% or thereabout, and you would have steady valuations, which are typical to old economy companies as well. So I would put all of these companies on my lens at all points of time and watch them quite closely, see what progress they are making. Right now, I think it's best to buy them as a basket. Look at them as options. You buy a few of them, and if even 1 or 2 of them turn out to be great winners, it will more than cover the investment made in the basket as a whole.
That's a great word coming in there, Deepan. But let's go across to Sumit and Shrishti, who are on ground at the ET now, 15th birthday celebration. Sumit, Shrishti, what's the vibe there? Shrishti, how is it feeling? I can see you are all dolled up, plus the stage is all set. What are we watching out for today?
Well, yes, the stage is all set because we are at the ET now, Leadership Dialogues 2024, and that's the 15th year celebration for all of us. We will be having the who's who of not just the capital market, but from the financial world as well. In a short while from now, we will be listening to the RBI Governor, Mr. Shaktikanta Das. But Sumit, the excitement is just building on, and we are seeing all the biggies just entering this particular hall, the big event that is organized in Mumbai. How's your excitement going?
Well, this is the place to be if you're in Mumbai today, because this is the place where all the big wigs of the business sector, all the big names, including Ajay Piramal of Piramal Group, SBI Chairman Mr. Khara, we can see a number of people who are just walking in. The excitement is just building up, and also it's coming at a time India is poised for a larger overall journey for growth. By 2030, we aim to be world's third largest economy, trillions of growth in GDP we are looking at, and a lot of excitement when it comes to especially talking about reforms and other things that are going to take place in Indian economy.
Well, certainly, Sumit, we will be trying to find the roadmap and their vision for 2030. We will try to identify the big themes that are lying out there. You did highlight some of the big corporates that are lined up for a guest discussion, but apart from that, all the big names from the capital market, from the likes of Mr. Manish Chokhani, Utpal Seth, other than that, Atul Suri, even Dinshaw Irani, you name it, you have it in this particular event right here in Mumbai.
15 years we have completed of ET now, and that's the occasion when all of them once again coming together to wish us what is it going to be for the next 15 years as well. We are excited for this journey.
Well, yes, Sumit, but let me just quickly ask you how your journey has been, because you were just highlighting that you have seen the 15 years of ET now all through across. So the excitement, and how do you see this baby getting bigger and bigger every day?
Well, it's been a very exciting journey starting from 2009 to now, and it's actually a very formidable channel. It is the top voice in business news nowadays. It's good to be here. Back to you.
Well, certainly.
A great journey, and surely watching out for all those important guests there. Thank you, Shrishti, as well as Sumit, for taking us as well as our viewers through what's happening on ground. But let me keep it going with the discussion. And firstly, I'm going to thank my opportunities to thank Deepan, Kunal, as well as Naresh for being with ET Now's journey. So it's a pleasure to have all three of y'all right now, and I'm happy that I could be the one thanking you all for being here. Naresh, let's keep it going then. And autos, I want to know about the auto sector and how you are looking at it. Anything interested or one should watch out for? Because this morning it did manage to touch those high levels, and again we've seen that fall coming in, a bit of a fall for the auto sector as of now in the red. But what's the view overall? Anything exciting there?
So I'm making a shift in terms of the focus from autos. For the last 1 year, I've been bullish on various auto names. Now is the time we are seeing a similar breakout happen in the auto ancillary space. And auto ancillary has a much larger basket. You have 20, 25, 30 names out here from mid cap, small cap, micro cap, large cap names, which are breaking out across the board. So there are many choices out here. So auto ancillary has a basket, whether it's a Motherson Sumi or the two Motherson Sumi names, or a auto axles on the lower side, or a JT, KT India, a pre-call. Various names are breaking out across the board. So I would say instead of autos, time to look at auto ancillaries all across the basket in the auto ancillary space.
Absolutely, auto ancillaries is what you're looking at, Naresh. But thank you so much, Kunal, Naresh, as well as Deepan, for joining in with us on ET Now. As always, it was a pleasure having you all on the show today as well. But with that, let me start winding down what's happening in the markets. Where is it going to be closing at? Nifty 23,550. Above that mark is what the Nifty will be closing at. Just slightly off the day's highest point is what we'll be closing at, the Nifty 50. Other than that, the Nifty Bank, let's pull that up because that also managed to see strong gains of almost 1% in trade. And the broader markets, that's where the outperformance came in, especially from the Nifty Smallcap today, holding on to 1% of gain, while even the mid-cap space managing to hold on to good gains. So yes, we've seen outperformance today coming in from the mid and small cap for the market. Other than that, Nifty Realty among the top sectorial gainer today, 1.3% gains is what the Nifty Realty will be closing at. Let's pull up Prestige Estate, Macro Tech Developers, all of them surely among the key gainers that we've seen coming in for the Nifty Nifty Realty. Individual movers, Bharat Defense locked in upper circuit, will be closing at that level. We did have a block deal that happened today, as well as on Friday we did see ADIA actually buying some stake in the company. JNK India, on the back of news flows too, will be closing shop with almost an upper circuit there, 20% up there for JNK India as well. New listing Ixigo, that's also a bumper listing, closing up with gains of almost 74%, so a bumper listing there. HAL, whether you look at it, that is strong gains that we're seeing there. Canfin Home, IDFC First Bank, GMR Airports obviously managing to hold on to good gains. FMCG, that's something that's not managing to hold on to gain. Media and Pharma, so seems like the defensive side is a bit subdued in trade today. But yes, that's how we'll be closing the day today. Continue with us on ET Now for our celebrations, but I'll wind down this edition of Closing Trades. Thank you for tuning in.
If you like this video, then like, share and subscribe to ET Now.